Hello, everyone. Good afternoon. As part of the Foundational 15 series, I am going to present the Chapter 2, Foundational 15, in this video. I thought it would be a good idea if I went over each of the Foundational 15. That's covered in the textbook. So we've done that for Chapter 3, and I think I've done this Foundational 15 as part of another video, as part of a job cost video. But if you would like to just focus on the Foundational 15 from each chapter, then this is going to be your source. All right, so this one is based on Chapter 2, and we know that Chapters 2 and 3 both deal with job cost accounting, job costing, job order costing. The first one, Chapter 2, deals with the unit cost, computation of the job cost, and then eventually the unit cost if a job involves several units. And Chapter 3 deals with the accounting cycle, job cost accounting, cost flows, and external reporting. So the actual cost sheet, the preparation of cost of goods sold schedule, the manufacturing cost of goods manufactured schedule, and the journal entries, right from procurement of material to the sale of finished goods. The whole cycle is covered in Chapter 3. But I think by now we have had enough discussions about both the chapters and some quizzes, some brief or longer problems, assignment issues, and I think this would the addition of this Foundational 15 would also complement the system, complement the efforts. All right, so this is the problem. The company name is Sweeten Company. You can see some information, pertinent information to the problem. The company has two departments, fabrication and molding. Molding is the first one, molding and fabrication. And two jobs during March of a given year. They have done two jobs P and Q. So this is the estimated total machine hours used for the two jobs in the two departments. So you can see molding, fabrication, and total. Estimated total machine hours, 2,500 and 1,500, so a total of 4,000 hours. Estimated total fixed manufacturing overhead, $10,000 and $15,000, so making a total of 25. And estimated variable manufacturing overhead per machine hour for molding was $40, and for fabrication was $2.20. So remember, variable manufacturing overhead is going to be added to fixed manufacturing overhead to find out departmental predetermined overhead rate. Okay, so the variable component and the fixed components, the two components are going to be added together to get the predetermined overhead rate for the department. Now this problem, this Foundational 15 has, of course, like other ones, 15 requirements. Of the 15, the first nine assumes departmental predetermined overhead rates. It doesn't combine and it doesn't make up a whole organization-wide or so-called plant-wide predetermined overhead rate. But the second half of the problem assumes, or actually is based on, a plant-wide predetermined overhead rate. And the idea is to show you the difference in product cost, unit cost, and job costs based on what kind of rate you use. And what is amazing is that the total cost, the total cash flow, the total amount of money incurred in completing the two jobs is the same. Is the same in whatever way you slice it. So it's like buying a pizza and slicing it into 6 or 4 or 9 pieces. So in whatever way, vertically, horizontally, diagonally, in whatever way you slice a particular block of cheese or a cake, of a certain size, it's when you add it all up, it's going to be the same. But nevertheless, it has implications. It does have implications. And this is a demonstration of it. But in practical terms, for example, if you think of a bank or a university or hospital, even though the total cost is the same, nevertheless, there are interdepartmental tensions, in terms of product pricing. We don't want other departments to load their costs onto our products. So that would make our products pricey. That would make it harder for us to market our products. So there are a lot of strategic short-term as well as long-term strategic considerations. That's why overhead allocation is an important organizational challenge. And it is very important for any organization to be fair and efficient in allocating overhead. Most importantly, I would say you've got to be fair so that the departments and products do not suffer from interdepartmental transfer pricing, so-called, or transfer costing. Transfer costing is not much used, but I'd like to coinage it. The transfer costing, like shifting one's burden onto another product or department. All right. So let's see. Here you can see the variable overhead rate for the molding department is $1.40, and for the fabrication is $2.20. And then we have the material supplied. This is indistinguishable. This is in kind of unequivocal. Very clear that we have added $13,000 of material to job P for the whole month for the two departments together, and job Q $8,000. So material cost is 13 and 8, labor cost is 21 and 7.5, and overhead is going to be added later, and the actual hours assigned, actual hours of labor, more in the molding department, job P used 1,700 hours and Q used 800. So total molding department hours is 25. And from the fabrication, P used 600 and Q used 900. So fabrication department's total labor hours is 1,500. All right, now let's start solving the problem. The first question was, what is the departmental predetermined overhead rate? So POHR for molding and fabrication respectively. So this is how I'd like to do it. Keep this variable overhead separate. There's no need to load it, multiply it by number of hours and make it a total, and then add the two together and dividing it by the same number of hours again. So I'd rather leave the departmental variable overhead rate because it's been computed. So we better use it. It's been computed already. So that's $1.20, $1.40 here, plus the fixed overhead for the molding department is $10,000 and their hours is 2,500. So 10,000 divided by 25 gives us $4. So $4 plus $1.40 makes it $5.40. For the fabrication, our variable overhead rate is $2.20 plus fixed component is 15,000 by 1,500. 15,000 is the total estimated overhead. 1,500 is number of hours. So that gives us $10 of fixed overhead per hour. So $10 plus $2.20 makes it $12.20. So for now, remember the departmental overhead rates are $5.40 and $12.20. $5.40 and $12.20. When you apply, you are going to use these rates and multiply them by the number of hours actually used by the two departments or by the two products in the two departments. All right, so that's the predetermined overhead rate. Number two is manufacturing overhead applied. Well, already we are there. So manufacturing overhead applied from molding to P, and then it will be molding to Q. So molding to P, look at molding's number of hours. So molding assigned 1,700 hours to P. So what's molding's rate? Molding's rate is $5.40. So simply multiply $5.40 by 1,700. That would be overhead applied from molding to P. And then from molding to Q would be $800. 800 hours times $5.40, isn't it? Because molding department, you can see, molding department used these hours on the two products, on the two projects. So P, in project P or job P, molding department has contributions in terms of, what happened is it's like a 2x2 matrix. Both the projects, both the jobs have gone through both the departments. So don't forget, both the jobs, both P and Q went through both molding and fabrication departments. All right, so in other words, both of them have contributed to the completion of the two projects. All right, and when you are there, when you visit a place, you consume their overhead. When you go through a certain station, when you go through a certain department, you consume their services. All right, so from molding to P, I'd say the answer must be 1700 times $5.40, and molding to Q is going to be 800 times $5.40. And then see, 1700 times $5.40 and 800 times $5.40. And then manufacturing overhead applied from fabrication department of P and Q are going to be 600 times $12.20, because fabrication's hourly rate is $12.20. So fabrication gave 600 hours to project P, job P. So 600 times $12.20, and Q would be 900 times $12.20. Remember, whether you're P or Q, as long as you go through the department, you have to pay for the departmental overhead rates, for the department overhead costs. All right, so that's how we have here. You can see manufacturing overhead applied from fabrication to Q, P, and then to Q, both multiplied by $12.20. You see, 600 multiplied by $12.20 and 900 multiplied by $12.20. So $12.20 is the key here, and $5.40 was the key there. All right, number 4, total manufacturing cost assigned to P. Total manufacturing cost assigned to P means project P going through both the departments. So just find out the manufacturing overhead. Total manufacturing cost here, not manufacturing overhead. Total manufacturing cost. So total manufacturing cost assigned to P means we have to add material, which was $13,000, labor, which was $21,000, plus overhead assigned by both the departments, remember. So P's total manufacturing cost is going to be material plus labor, plus manufacturing overhead from both the departments, both molding and fabrication. So in the two departments, you can see molding to P was 9,180. That's exactly here, 9,180. And then fabrication to P was 7,320. So add the two together, and that's your manufacturing overhead applied from the two departments to P. And then add the three together: material, labor, and overhead. And your total project cost is $50,500. Okay. That leads us to requirement 5, which asks unit cost of P if P had 20 units. So unit cost is simply divide the total cost or total manufacturing cost by 20, by number of units. So number of units was 20. So we just divided by 20 and we got 25. That's the answer to requirement 5. The requirement 6 is total manufacturing cost assigned to Q. So follow the same process: material plus labor plus overhead from the two departments. Material here was $8,000, labor is 7.5, and overhead is $4,320 plus 10,980. So these are fabrication's contributions to Q. All right, so fabrication's contributions as well as molding's contributions to Q. So there are two overhead amounts here, like it was in case of P as well. So the total cost of producing job Q or completing job Q was $30,800. All right, then immediately after this, we're going to divide it by number of units that Q produced. Q had 30 units, so if we divide it by 30, we're going to have the unit cost. And that unit cost is $1,027 approximately, 1,026 and then 67 cents. All right, the selling prices, if we assume an 80% markup, so simply multiply the production costs or cost of production by 1.8, or just have the cost, then add 80%, then add the 2. Either way works. So we lost our recording in the middle, I think. So let me continue. Just hang in there. Okay, there we are. There you go. So selling prices of the two projects, or two jobs, P and Q. So simply multiply the cost of production by 1.8. So I did that for P, 50,500 times 1.8, and for Q, 30,800 times 1.8. So please see requirement 8. And we do the same for on a per unit basis. So divide these numbers, these costs, these estimated selling prices by 20 and 30 respectively for the two projects, or go back to the unit costs, like one was, I think, 25.25, another was 1,027. So multiply 25.25 by 1.8, and that's going to be 45.45. It's quite rhythmic. 25.25 was a unit cost of P. So if you multiply it by 1.8, we're going to have 45.45. And 1,027, 1,026 and 67 cents was the cost of a unit of Q. So multiplied by 1.8, you're going to have this number, 1848. That is the estimated selling price of a unit of Q. All right. So the way I have done it here, I've simply divided these two estimated selling prices for the whole projects by 20 and 30 respectively. All right. So take a look. Okay, then from 9 onwards, 9 is cost of goods sold. Cost of goods sold for the period. So here we don't know how many units they sold. They manufactured 20 and 30 units respectively, but I'm assuming that they sold all the ones of the total cost of the two. So 50,500 plus 30,800, that is going to be the cost of goods sold. Simple. Actually, you know, it is a bit rudimentary, I would say, because before we get to cost of goods sold, we need to know how many units we're going to sell. Are there going to be anything left over in finished goods, or did you have any beginning inventory of finished goods and stuff like that? I think at the beginning of the problem, they said that they didn't have any beginning inventory of anything, neither raw materials nor work in process or finished goods. Anyway, but I'm not sure if they haven't mentioned if they didn't have any ending finished goods inventory or work in process inventories. Well, and now from 10 onwards, 10 to 15, we assume the rule changes. You know, it's now a different ball game. Now, instead of having departmental overhead rates for molding and fabrication departments separately, we're going to have a plant-wide combined overhead rate. So combined overhead rate is the combined overhead cost is still the same, but rate is going to affect the two products differently, I tell you. So first, let's calculate that plant-wide predetermined overhead rate. So plant-wide predetermined overhead rate is equal to the plant-wide overhead expenses or overhead cost divided by plant-wide hours or plant-wide denominators. So that's this. So POHR, you can see, is the two overhead costs. Overhead spent in the molding department was 16.5, and in the fabrication was 15.3. Sorry, 16.5 and 15.3. So add the two together and divided by the denominator was machine hours, which was 2,500 hours in molding and 1,500 in fabrication. So total number of the denominator is 4,000 and total cost is 31.8. So that leads to a plant-wide POHR of $7.95. $7.95. So now we're going to use that to price the two products, and you'll see there will be quite a bit of difference in the job costs. So now find out the manufacturing overhead applied to P and Q. So P received a total of 2,300 hours. How? Here, P received, you can see 1,700 hours from molding and 600 hours from fabrication. This is P's column. P's column. So from molding, P went through molding and enjoyed 1,700 labor hours, and went through fabrication department and enjoyed 600 hours. So the total hours plant-wide is 2,300. Now multiply the 2,300 by 7.95, you're going to get the manufacturing overhead applied to P for the whole project for P throughout the organization. So that down here, you can see manufacturing overhead applied to P is 2,300 times. So we're going to use 7.95. So the 5.4 and $12.20, that's gone now. It's now one rate for the whole organization. Whoever, whatever project, whatever job is completed in this organization has to pay accordingly, according to their number of the denominator. So 2,300 hours times 7.95, and job Q went through both the departments and had a total of 1,700 hours of work times 7.95. So that would give you the overhead applied to these two projects. So now, what's the cost then? So material and labor costs are the same as you did under the departmental overhead regime. So material, labor, these two rows are the same, but overhead is different. So total overhead used by P is 18,285, and by Q is given here. So that leads to a total project cost or job cost of 52,000 now. It's not 50,500 anymore. You see, job P's cost has gone up 52,285. Not a big deal, maybe, because P's cost used to be 50,000. P's costs used to be 50,500. Let me see. Yes, total cost of P was 50,500 and Q was 30,800. So now P's cost has gone up a little bit. It's become 52,000 something, and Q's cost obviously would consequently come down from 30,008. It's come down to 29,015. The total is still going to be the same, and if you divide them by 20 and 30, the unit costs are going to be different. See, the unit cost of P used to be 25.25. It's now gone down to 26.14. The unit cost of Q used to be 1,027. It's now come down to 967. All right. That leads us to requirement 13. Well, this is 12 and 13 together. 12 and 13 are together here. 12 was for P and 13 was for Q. So that leads us to requirement 14. And that's here. In 14, we see the selling prices. Of course, P has a new cost now, so multiplied by 1.8. That would give you P's total price. Instead of doing it, multiplying by 1.8, I have done the cost plus 80% in total and then divided by 20. So this is the traditional way, the textbook author's way. They do the cost of the job plus the markup, total estimated selling price, then divide by number of units in that job. So did the same for P and Q and got the estimated selling prices. But it's not much the same, exactly the same. You'd get exactly the same if you want to multiply these two numbers, the 2614 by 1.8 and 967 by 1.8. Simply multiply these two unit costs by their 1 plus 0.8. 0.8 is the markup by the estimated selling price factor. You'd get the estimated selling prices. No problems there. Finally, the cost of goods sold, amazingly, is the same. The individual costs are different. The cost of one has gone up. The cost of the other has gone down. See, the cost is subject to how we define overhead, how we decide to allocate overhead. So we can make you unpopular. We can make your product, make your department unpopular, make your department losing by just tinkering with overhead application rates. So there are going to be organizational politics, organizational tension, interdepartmental tension, inter-unit tension, inter-plant tension. So that's why top management has to be extremely careful about keeping it fair. Fairness is the key, I'd say. So whatever you do, you have to have everyone on board and make sure that everyone understands how overhead is allocated, why we give away a certain percentage of our revenue or a certain percentage of our contributions to the headquarters, why we bear, say, 50% or 45% of the headquarter cost, while another department bears only 9%. Okay. All right. So this is the cost of goods sold. Just add the two costs together. The costs are calculated under requirement 12 and 13. So add the two costs and what it is, same as under the departmental overhead rates. Still $81,300. All right. So I hope that this series is going to be productive, is going to be effective, and I hope we have this. At least we successfully keep doing the series of Foundational 15. So this is the end of Chapter 2's Foundational 15, or I don't intend to make any more videos on chapters 2 or 3. Maybe 1 or 2 problem solving sessions, where I might, depending on how much time I have and how much need there is, I might have a session going through several problems. Like I have the ebook in front of me, and maybe may discuss some of the problems. So when you go and solve the same problems, you can listen to what I had to say. All right. Enjoy your weekend. Thank you for your attention. Bye-bye.